Welcome back. Let's take a look at how the markets have performed then today. It certainly has been a mixed day really across the board. Asian markets initially were a little bit higher up and unfortunately then it began that mixed trading feel. The Shanghai Composite was the only one going up into some positive territory, but not much really to write home about. A lot of that impact really has come with a sense of the second wave of coronavirus cases. We've seen the likes of schools, even some territories out in Beijing, having to be cordoned off again in Beijing. China there, where we're getting a second wave of the coronavirus. Even more cases out in the United States meant that the markets out in that country, Wall Street in particular, went down. Only the tech shares managed to push up the Nasdaq, which continues to sit at multi-year highs as well at this point in time. Europe, unfortunately, all negative as well as we get into this afternoon's trade in this afternoon. On the local bourse, only the industrials have managed to tick higher there, following the Shanghai Composite going into some sense of positive territory, so 0.2% higher for the industrial picture there. Some news out when it comes to the counters as well then is what we'll unpack in just a moment, but the JSE All Share 0.75% into some weakness today and back below 54,000 points there, sitting at 53,622 points. The biggest losers today, the banking counters and the financials, not doing so well. 3.5% loss there across on those counters as well. We'll unpack that in just a moment or two. If we head on to the commodities board, well, a slight better picture for the oil price if you're an oil producing nation. Up more than 1% so far, $41.20 a barrel for Brent crude. It's $8.18 for platinum, with gold sitting at $1,723 a fine ounce there. So demand not necessarily sitting in that space either. On the local front, when it comes to the currency, well, pretty much sustained weakness for the local currency. 17.32 against the US dollar. Look, still better than the 18 rand we had not so long ago, but certainly not below that figure either. So we're hoping to get a better sentiment there. Hopefully, if the global picture does improve somewhat. Down as well for the rand against the euro at 19.45, 21.65 then for a British pound as well. Let's get into this picture now. Unpack it all a little bit more. Chantel Marks joining us via Skype this afternoon. Chantel, thank you so much for the time. So it is a market that went up quite a bit, then dropped off again, and now just doesn't seem sure of where to go exactly. We're sitting in a bit of a mixed ball right now.
Yeah, we have loads of conflicting news flow at the moment. So on the one hand, you have government support for small businesses, major investments made on the fiscal side. You have monetary stimulus that rivals the global financial crisis and even exceeds that. And then on the other hand, you have fears still that this virus is not contained. So as long as there's a threat of renewed lockdown measures, you're probably going to see this kind of tango taking place.
So did we perhaps jump the gun with our initial gain, or was that just purely based on the fiscal stimulus or the monetary stimulus as well that was poured out in the initial parts of the coronavirus? And now it's a case of, well, good luck and let's see how things fare and the longevity of your share price.
Yes, so I think that the market was kind of pricing in that this will be a very short-lived recession that we're going to live through right now, that it won't impact on the fundamentals of some of these listed companies as much as what was initially anticipated. And one of the reasons for that is because of the support received from central banks and governments the world over. So markets try to look through short-term events. The problem is just if this is no longer a short-term event, then certainly markets did run ahead of themselves. But I think we're probably going to know more over the next week or two as we see how these little second waves play out. If it's similar to what we saw in South Korea, it's almost a non-event. But if it is a meaningful second wave, then that's definitely something that will impact markets.
Yeah. All right. Well, the big story that has certainly filtered through in the coronavirus when it comes to stock counters has been the fall in that oil price, which has obviously affected a whole lot of issues, including the likes of Sasol, which continues to be in the doldrum. Is that still a stock we sort of look at and think, yep, there's still room for growth there?
Yeah, I mean, Sasol really depends on what the long-term oil price trajectory is going to be and how they are going to kind of navigate the current uncertain environment in which they find themselves. So far, they've done quite well. I mean, they were in a really bad space in April or in March and April, and they seem to have navigated it quite well. They put some oil price hedges in place, which should make it a little bit easier to forecast their earnings stream. Not really like that, but it all will depend on what that oil price will do, and if it will continue to increase, and if they will be able to sell some of their assets in order to clear some of their debt, because ultimately I think that share price could come under more pressure if talks of a rights issue resurface. If the rights offer is kind of taken off the table, then I think that the stock will probably have a little bit more to give, because we don't expect oil prices to stay this low forever.
What about Curro then? I mean, you get into that education space, and one is certainly taken a look at that entirely, and they come up with a trading update today, and you get the sense then that education in itself is going to change the way it's currently done. How does that impact Curro and their trading statement as well coming out today?
Yeah, I mean, so Curro actually announced the rights offer. They are looking to raise, I think it's about 1.2 or 1.1 billion rand, which is about a third of their market cap. They're looking to raise additional equity in order to see themselves through this period and fund continued acquisitions and probably organic growth. So the thing with a company like this is there definitely is still space for private education in South Africa. We do have too few schools in the country. They have a lower cost model than some of the traditional higher end private schools, and we are underpenetrated as a society relative to the world when it comes to private education. The problem is that just near term, as the economy comes under pressure and reality bites for many consumers, they might opt not to place their kids or keep their kids in a private school. So definitely near term pain to be felt, but I think longer term the model still makes sense.
It's not just the private schools that are bound to suffer, or the reality, of course, then, that the economy may indeed bite. It's also the retail sector that suffers, particularly the fashion or clothing sector as well. Foschini Group coming out with their set of earnings, not necessarily, of course, too much of an impact to COVID-19, considering these are the results to the 31st of March, but you can kind of see in March then that things are beginning to wane a little bit. Revenue going up 3.6% to 38.5 billion. The future, though, not necessarily looking too enticing for the Foschini Group.
Yeah, I mean, they're actually still quite positive. I think the market's a little bit more negative on them than they are of themselves. But they also decided to come to the market. They've asked shareholders if they can also make a rights offer and raise some additional equity. This company is quite highly levered. They're quite uncomfortable during periods like this. So they're going to use the proceeds to pay down some debt. They also mentioned that they are seeing really good growth in their online platforms. So they want additional funds to invest in that. And then they also want additional headroom in order to make acquisitions or take up opportunities within their existing brands as they become available. I think if you look at what they've experienced post the lockdown period, obviously at a complete standstill in April and for a bit in May. If you look at May, actually, they were able to open most of their stores except for their jewelry division, and they actually managed to grow revenue year on year, which is really strong and points to a bit of pent-up demand among South African consumers. But yeah, a mixed picture there for Foschini Group. Let's see how it plays out.
Yeah, well, we'll certainly see how things fare. Look, it's going to be rough. That's one thing for sure. And these earnings won't be a reflection of next year's earnings. That's one thing we can certainly promise. Even the likes of Zara having to cut down the number of clothing shops that they have as well across the world also. Chantel, appreciate the time. Chantel Marx is from FNB Wealth and Investment joining us there, helping us unpack that market picture.